Good morning, everybody. This is Conway. It is November 14th, 2021. Just making a video for super basic charting, technical analysis, whatever you want to call it, because I've seen some people say that they don't know how to do this at all. There's a lot of channels out there with people that are much better at TA than me, but this is a super basic one just to get you started. Hopefully by the end of this, you'll be able to understand what some of this stuff on the screen means, to be able to see trends, see pivot points, see changes. But mostly, if you wanted to buy dips, you could probably pretty accurately find a dip. Okay, so I'm going to start with Fidelity. I don't know what platform everybody else is using. I personally really like TradingView. I just don't have the money to pay for TradingView right now. I don't like the business model of Webull, but I have to admit that their web charts are actually pretty intuitive to use, so, whatever works for you. Before we get started, obviously this is not financial advice. Nothing I say should be construed as financial advice. It's not a recommendation. It's not an endorsement. I'm not telling anybody to buy, sell, hold, or do anything. You can always lose all of your money investing in the stock market, so don't treat it as advice. Okay, so why don't we get started with a new chart? And we'll use GameStop as an example for now. When you get started, a lot of charts show a linear chart or a line chart, and I personally don't like it. I'd rather use candlesticks, whether it's hollow or filled, doesn't really matter. You can use Heikinashi as well, not on Fidelity. Fidelity doesn't seem to have Heikinashi candlesticks, but you could use hollow or filled candlesticks and apply that. And you're starting to get a little bit more information because each of these candlesticks represents a certain unit in time. So this is today's chart, meaning Friday's chart on the 1 minute scale, but it'll scale up to whatever time frame you're looking at, okay? If you want it to go an hourly chart or a daily chart, candlesticks are your friend here. The first thing that I want you to turn on is you go to settings over here in the top left, and you turn on show price volume distribution, and you apply that. This is probably the most powerful thing that I never see people use, and unfortunately Fidelity doesn't do a great job at it, but it's good enough for our purposes. TradingView does a better job at this because it shows you, Fidelity shows you really large ranges, and TradingView shows you much more detailed information. There's a lot more granularity to TradingView, okay? And so what is this? This is basically the volume at any specific price point. Okay, so what you can think of it as is these are like lines in the sand where shorts and longs are battling it out. Okay, so you can see here, this is from the past month, and this is a daily chart of the past month. It seems like this range, because of the huge volume and profile, that this was a very important range to fight over. Okay, and that range was between $217 and $218.99. Call it $219. Another one we see is down here. Right, this is $183 to $185. So we know that these are two pretty important levels. This one is more important because it would seem like there are some short sellers that don't want to let GameStop get over this price, and there are some longs here that don't want to let GameStop get under this price. Now there could have been some shorts here as well, right? And this is how you can spot a short squeeze as well, right? Now this is 1 month. Let's go back out a little bit. Yeah. Okay. So this was 183 to 185. 183 to 185. Okay, so relative to the last 3 months, this is actually not even that big. Right here, look how huge this volume and profile candle is, okay? This is the line in the sand right here. This one's another one, right? They don't want to let it get above here. And this is where you could find dips, right? Often, as you can see, the price of a stock will trade between these areas of support and resistance. And if you have support, that means that buyers are willing to step in to support the stock at that price level. When you see resistance, it means that short sellers are stepping in to sell the stock to try to drive it down. So then what happens if you break below support? Well, then the support becomes resistance and you have to fight above it, right? And this is what you see happening here. On this day, the price tried to run up. It barely broke over. You see the little bit of green sticking up above that price point? It barely broke over, but then it got knocked back down. The next day, it tried it again. Not as strong. The next day, it tried it again. Pretty strong. The next day, it broke above, got knocked back down a little bit the next day, or by the end of the day. And then the next day we broke above. And when we broke above, we broke up with strength. And why does that happen? It's because when you're short at this level, and you can't keep holding it back, right? You tried knocking it back down here. You tried knocking it back down here, here, and here. At some point, you run out of steam, and you can't handle the amount of risk or loss anymore. So then when you're short, you turn into a long. Meaning, instead of shorting and selling the stock, you switch sides and you start buying it. And then with retail investors buying it, with institutional people buying GameStop, and now suddenly short sellers also having to give up and flip and buy GameStop, then you get this huge price action, right? And that's what happened here. Here we tried to get up even higher, and here pretty much the same thing, right? So it ran up. This was the day that it hit 255 recently, right? It runs up, and then short sellers, they wait for retail buying pressure or institutional buying pressure to die down, and then they short it back down. So at 255, they probably opened up a bunch of new shorts, knocked it back down, and have been battling out this line ever since. And they got it down here, and this is where we are today, right? Okay. So again, volume in profile, also known as the price volume distribution. This is probably my favorite indicator to turn on. It drives me crazy when I see people not using this because this is such an important indicator. If you're on Fidelity, again, it's right here. You open up a chart, you go to settings, and right here in the show hide, show price volume distribution. Okay, you could show previous close too. That's just, a red line for where the stock closed the previous day. But that's not that important to me. And show extended hours if you're trading on Fidelity would be from 7 a.m. to 9:30 or 9:29 and a.m. Eastern time, and from 4 p.m. to 8 p.m. Okay. If you're not able to trade in extended hours, all it takes is a phone call to Fidelity to activate it, and you will be able to do so. Okay. So that's the number one most important indicator for me. Webull, as far as I know, doesn't have this. TradingView does have this. I don't think Robinhood has this feature, and a number of other brokers may not have this feature. I'm not familiar with all of the charting platforms out there, so you're going to have to do a little bit of your own research to figure out whether or not your preferred chart has this. If it doesn't, TradingView does let you chart on the web for free. It's just that your settings may not save. Same thing with a bunch of other services. Fidelity is free. This is Active Trader Pro. This is their professional platform. It's free to open up an account. It's free to download this software. It's free to install. Even if you're not with Fidelity, if you have nothing else, you could always use this. Again, if you have the money, and I'm not being paid to say this, it's not a sponsorship, it's not an ad or anything like that. I really think TradingView is a really powerful piece of software that if you've got the money, definitely consider checking it out. There's a 30-day free trial, and you can chart on the web for free, but it really pays, especially if you're doing this all the time and every day. I really like it. Okay, but we're going to stick with Fidelity and other free platforms for now. All right, what's next? If you don't have volume and profile, well, I'll get into a tried and true, but admittedly pretty old-fashioned way of charting. And that's with moving averages. Now understand that moving averages have been around for a very long time. And a lot of modern day traders and investors, they may not necessarily like using it, okay? All right, so we're gonna look for a simple moving average. All right, so let's start over, okay? So you're gonna go to the indicator drop-down menu, scroll over to simple moving average, and you're gonna add a bunch of these, okay? So you're gonna modify the one that you just added. For the red, I like using the 9 period moving average. And let's go add another one. Simple moving average. You know, let's just keep this simple. And we'll go with a 9, a 20. For 20, I like using yellow. How many should we add? I think 2 more. We'll add a 50. Modify that. Go to 50. And we'll do one last one. And that is 200. I like doing like a white or a gray color for the 200. Okay. So then, using these moving averages, how do you determine whether to buy a stock or not? We're going to switch over really quick to show you something. And let's zoom out. When in doubt, zoom out, okay? That's one of my rules, which I think is good. So we see that this gray line here, that's the 200 period moving average. And we're on a daily chart, which means this is an average of the 200 days put together. And what we see is that the price, the candles, are below the 200 daily moving average. Okay, the 200 period moving average. And what does that mean? That means that this is a stock that's been in decline for a long time. If you look, this is, you know, it's been going down for quite a while. I mean, this stock, it stopped trending upwards back in like October of last year. Okay? And so this is overall, the momentum here is bearish. The thing about moving averages is they're really simple to read in the sense that if you know which direction is up or down, you can tell which way this is going. Okay, so let's zoom in a little bit to, you know, today. And we see that on the 200, the long term is trending down. This is the 50-day. So in the medium term, it's trending down, but it's leveling off and it's going sideways. Although it looks like it's a little bit down. Okay, and the 20, it was going up. It leveled off and now it's heading down again. And then on the 9-day, which is the very short term, you know, this one swings a little bit more. So it was heading up and then it was going down and then it leveled off. It looks like it's slightly turning down again. So overall, we have to say that this is a bearish looking chart for BABA, right? And how quickly the lines go down is an indicator for how bearish it is or how neutral it is or how positive it is, right? So here you see it heading up really fast, and you can see it in the candles. It goes up really fast. And then it levels off, which means that momentum's slowly dying down, and then more and more people are selling now, okay? So anything under the 200, because, you know, you can call it gravity if you want. This is the trend, and it's very difficult to fight a trend. So overall, this is a bearish chart. Let's go back to GameStop. We're above the 200. We've stayed above it for a long time. We tried to get, you know, short sellers tried to get it below here, but they were unable to do so, and we actually bounced almost perfectly. We went below a little bit, but almost perfectly we bounced off the 200 daily moving average. This is a very bullish pattern, if you believe in this type of technical analysis, right? Certainly some people don't. So a lot of people, they like to look at the highs and they say, oh, well, it was $400, $500 in January and you've never reached above it. And yeah, that's true, and people interpret this as being bearish or bad for the stock. But if you look, every time we reach a low, we reach a higher low. And what does that tell you? It means that every time, over time, this stock is trending higher and higher and higher. This is what you should be looking at. You should be looking at the lows here. And if you were going to buy the dip, you would want to buy on these dips, right? A lot of people, they just, if they have money, they throw it at a stock, and they don't necessarily get the greatest deal, especially if you think that, you know, a short squeeze is happening and you want to chase it up. That's a sure way to get burned. And here's the thing about stocks, which is weird, right? Like, if you're going to the mall or anywhere to go shopping, typically you want to look for a good deal, right? You want to look for a discount. And this weird thing happens in the stock market where instead of doing that, the opposite seems to happen, where you see price moving upwards, especially if it's moving fast, and you get excited, you get some fear of missing out, and then you try to rush and go in and buy. I've done it. I'm sure everybody in this, you know, listening to this has done it. You got to realize these things and understand when you're doing that, so that hopefully, you know, if you think it's going to head back down again, you can have some discipline and wait for that better deal. Because look, if you bought here, you would have had a better deal here. This was in February, right? And then at the end of February, the price shot up again. And people who, you know, may have bought here, they got burned here at the end of March. So this is how you spot dips, right? Between volume and profile, right? Looking at the volume and profile here, we're currently right around this range, right? And that's where you find dips. Okay. Knowing what the numbers are, knowing where it might dip to, you can then put in a limit order for a specific price, okay? So those are two ways to find where the levels of support and resistance are, okay? Volume and profile, but also looking at the moving averages. Here's a third way, and this is actually worked out pretty well for me. You want to be on a daily chart, okay? Maybe we don't need to be 6 months. Let's do a year. But you want to be on a daily chart, and you want to start looking for these big candles, either up or down. In the top left here, you'll see these numbers, and this is what this means. Okay, obviously this is the date. Okay, so whatever date my mouse is hovering over, whatever candle we're on, that's the date that it represents. OHLC, you see this? This is what price the stock opened at. This is the high of the day. This is the low of the day, and this is what the stock closed at on that day. Okay, open, high, low, close. Okay, and on the daily chart, you can begin looking for these big candles and making note of the price points. Okay, now I'm looking for one specific price point in general that has been really pretty consistent, and that is what? That is like 197. I've had this line drawn on my chart for months, and it seems to work really well. I'm shooting this live, so I apologize. Where is it? 197. I've had this on for such a long time. There we go. So you can see here, all right, look in the upper left now. On June 21st, 2021, this candle, the low of the day was 197 exactly. Okay, I drew a line there, and it's held pretty well ever since June. So let's look at the 197 range. Okay. Even just more recently, let's go to a faster moving chart. Let's go like a 5-minute chart. we'll find where 197 is, right here. It came down, it tried to get below 197, and it bounced up again, right? Here again, around 197, twice, 3 times. It goes down to 197, right? And then it bounces up again. It tries again, maybe gets a little bit below, and it bounces up again. It tries it again, tries to get a little bit below, and it bounces up again. So these potentially could be important price points. Okay, going back even further than that, what is this, 1 month? Let's go to 3 months. I had 167 on my chart too, and I remember posting this on Twitter, and you know, one of the Jim Cramer parody accounts, Jom, was making fun of me for using technical analysis, but I pretty much nailed. It wasn't 3 months ago. It was between 1 and 3 months, but I had said that I think 167, 165 was the price, and here we see the low was 166.79. Again, top left, 166.79. This one, 166.70, 165.81. Right. So if you know that that's the range, or you know that there's an important line there, you could potentially throw in a limit order for that price and catch it here, right? Because this seems to be a price point where bulls, you know, people who are bullish GameStop, who want to buy more shares, but they don't want to get, you know, a bad price on it. They want to get a good price on it. They can put in limit orders, and then these, as soon as they hit, will buy them GameStop. Okay, that's an important price. If we go back to that 1 year, if you hunt through these candles, right, you will be able to see 167 a bunch of times. So again, we want to look at some big candles, right? And there are some here, all around that range. I'm not going to waste your time by meticulously going through all this stuff. You can go through this yourself. But typically, when you see big candles, right, either green or red, these numbers are going to be important. These, you know, highs and lows. Okay. So that's it for simple moving averages. This is going to be kind of a long video. I think I'm going to end it here, and we'll start another video, and we're going to talk about some other indicators. Again, these are going to be a little bit more old school. A lot of people today, they like just looking at, you know, VWAP, which is something completely different that we'll get into eventually. They like to look at volume and profile. They maybe, we'll get to it. All right, we'll end it here. Get your chart set up, and we'll continue this in another time, at another time in another video. All right.